Hello, fellow chartists. Welcome to my YouTube channel. I am the Chartist, and today we're just gonna take a look at the SPY. This is a weekly chart, and we're gonna take a look at other stuff, my usual stuff as well that I put in the title. But we're looking at the weekly chart here, okay? And we're doing this because we got the new week starting tomorrow, so we want to get ready to know what levels to watch for, what possible scenarios, so we know where we should be bullish or bearish or where we look to enter, stuff like that, okay? So let's look first at this weekly chart of the SPY, okay? This orange line right here represent a breakout level. It was a very strong resistant level, as you can see. For weeks the SPY struggled to get above that level, 470.6. And on the week of December 27th, we finally broke out and we got a close above that. All right, we finished out the megaphone pattern here, but we were able to stay above that breakout level. So what we was watching for at that time, what I was watching for, is will we break out of this megaphone pattern? Obviously, from this big bearish engulfing candle, we did it. Okay, so bearish engulfing candle, just like it says in that title of the candle, the name of the candle, bearish engulfing candle. All right, that's when you got this red candle that's bigger than the previous green candle. All right, you can Google it. All right, because this is not what this video is about. Okay, but Google it if you want to know more about the bearish engulfing candle. But it is a bearish candle nonetheless. All right, that's one. And two, we got a false breakout. And I always tell you guys, if you've been watching, false breakouts are bearish. Okay, you see a false breakout, that's when I would like to bet to the downside. Okay, so if you had some puts, if you kept buying puts at resistance last week, you should have made some type of profit. I hope you guys did. Okay, anyways, we got a false breakout looking bearish, the beginning of something, not so good for the bulls. Okay, so keep in mind, in January, based on the seasonality, it gets pretty bearish, and it's not really the best month to be a bull for January, in January. Okay, so if you're SPY bull, take a look at the seasonality. Okay, I'll show it right here. I posted on my Discord. I can just search it up, and boom, right there. So the first half of January is usually choppy, but it does give us a new high, and it's a continuation of the end of the year rally. So beginning of January is usually bullish, somewhat bullish, but then it changes towards, as the month progresses, it get into a bear market, okay, all the way into February. All right, it's got bullish engulfing candle on the weekly, false breakout. January is here. All right, is this the time to be bearish? Maybe. All right, but here is my plan. As far as the being bullish goes, I would like to see this level recaptured. And what recaptures mean is pretty straightforward. Is when a critical support has lost, but then we reclaim it. All right, so an example is right here. 470.6 was a critical support when SPY was trading up here, but once it's lost, meaning it went back under, like this candle, it went back under that support. So now it's not support anymore, it's resistant. Okay, so if it gets back above and closes back above this resistant level, that resistant level then becomes support again, and it was a critical support. So that means it's recaptured. All right, it's when it gets back, it closes back above. Keyword is close. It has to close back above. We're using a daily chart, so we have to take it a day at a time. All right, so that's what a recapture is. If it closed back above the support that was previous loss, that's a recapture. All right, and if we do get that recapture, that's when I would be more bullish again, because a recapture of a breakdown is pretty bullish. Okay, because this is a breakdown. We broke down after a breakout. We got the breakdown of this critical level here. All right, and then I would probably be bullish up to the 48.1 price target. See if the upper part of this megaphone pattern will get touched again. But as long as we do not recapture that level, I am bearish. That means I am biased to the downside. That means I will be looking for opportunities to bet to the downside. That's what bearish means, okay? For anyone that thinks I'm being ambiguous, I'm trying not to be, okay? So that's the levels I want us to watch, okay? For a bullish scenario, is back above 470.6. Now, as far as support goes, we got the close below the 50-day moving average, as you can see. All right, close below the 50-day moving average. In the past, especially all 2021, only one time that it didn't happen back in September. But every time we close below or at the 50-day moving average, the very next day is a very green day, the next trading day. All right, so we got the close below the 50-day moving average. So we're going to see if that trend continues. If you don't believe me, go back and check. Every time we test it, either test it or close below the 50-day moving average, the next day it turned green, the next trading day. Like right here, for example. We closed below the 50-day moving average and went green. All right, we closed below the 50-day moving average the next day and went green and continue upwards. Here's the one that didn't happen. We closed below the 50-day moving average and it continued to go lower. All right, that's the one time. Here's another one. Test of it, went up higher. This one we closed below, went up higher. Tested it, went up higher. So you guys get the picture? Tested it, went up higher. Closed below, the next day went up higher. So the 50-day moving average has served as a strong support level or a strong recapture level if it happens. All right, so we're going to see, will that trend continue? Will history repeat itself? Because if not, we're going to have a lot more downside. We go back to the weekly chart. First support is around 463. Now, right now, this 13-day moving average is saying 462.8. But keep in mind, when the week starts tomorrow, these moving averages will move up slightly. All right, so 463, this is a support based off the 13-week moving average. Another critical one will be the 20-week moving average. Is at 456.20 right now, but we can round it up to 457 because it'll go up slightly, okay? And of course, the support of this megaphone pattern will be at 439, 440, okay? That will be a critical support level. So watch for bounces off of those levels. I am only bullish on the SPY if we get back above 470.6, okay? The strategy is simple. You short at resistance, you go long at support. Got to manage your risk. Don't let greed guide you. Take your profits or set an in-profit stop loss or a trailing stop loss, whatever your strategy is. Just have an exit plan. All right? And let's take a look at the triple Q. Triple Q is looking bearish as well. We had the false breakdown here of the this big bull flag. So I will not be bullish until it gets back above that bull flag. So triple Q 391 or above, I would be bullish. As long as below 391, I am bearish. Okay? Now, we could come back and test this previous low. This previous low was at 377.5. Here's when it was a low. It was tested there. And it was tested here as resistant level. All right? So it's a pretty interesting level. Sorry about that. Pretty interesting level. We'll see if we get another bounce off of it. If not, we're going to have a lot more downside down to 364. 365. Okay, so that's a big drop. Okay, so keep in mind, I am not bullish, meaning when I'm bullish, I look for long opportunities. I will not look for long opportunities unless triple Q is back above 391. Other than that, I am bearish on triple Q. Those are the support levels. The resistance level is 391. And there's some here at 389. 388 to 389. But the support level, 377.5, and of course the next big leg down at 365. Okay, Dow Jones not looking as bearish as QQQ or SPY. We still do not have a false breakout here, okay? It actually came down, it tested the breakout level. We got a bounce there so far, but it's struggling at this resistance, okay? Got a breakdown of this resistance right here at 362.6. The next day, it was above it briefly, but it came right back down, and it closed below that resistance level, okay? So it's not bullish, it's not bearish. We just got to wait to see what the price does come Monday, come tomorrow, to get a clearer picture of where Dow Jones wants to head to, okay? But obviously below 361, I'm bearish because it will equate to a false breakout. And if we can get back above 362.6, I'll be more bullish, okay? It'll recapture the resistance level, and we'll see if it can ride back up to 368. IWM, plain and simple here, bearish, all right? We closed below this red support level that started back in July. It did not hold once again, okay? We do have a potential inverse head and shoulder pattern forming, okay? Potential, right? The low of the left shoulder is at 212.75. All right, so we'll see if that can act as a support, and if it does, that's a good sign that this could be an inverse head and shoulder, and it could head back up to the neckline. The neckline is at 226.9. All right, but if that doesn't hold, we have the support level, which is a previous low back in December 20th, and then also was a low back in July 19, which is also where this rising red trend line began, okay? The reason why I'm using that as a support is because not once but twice that level had some demands, okay? At that level, there was some demands that came in. You guys get what I mean by demands? All right, there was buyers. Buyers stepped in at that level twice and pushed the IWM. Will it happen the third time? We will see. Tesla, guys, are just looking bearish at this point, okay? You should have been bearish when we got this false breakdown right here, when it closed back within this bull flag. And then you should have been more bearish when it retested that same breakout level as a resistance, and then it started pushing down, okay? And then we got this big body red candle right here, and it was able to close just above the 1023.4 support level, okay? That's right there. If that is lost, you got to play it level to level. If the 1023 is lost, the next one is at 971. And like the IWM, we do have a potential inverse head and shoulder pattern, okay? Left shoulder, head, will we get the right shoulder? So 971 is a must hold, okay? 1023, if that holds, okay, then we could ride it up. The next resistance will be at 1065, and then the big one right here would be about 1065, excuse me, because not only is that a resistance level based on the fib level, but also based on this bull flag, okay? So above 1065, I would be bullish on the Tesla again. All right, if we get a bounce off of 971, that's a must hold level. So 1023 is a weak level. It's been tested twice. I think if it gets tested again, it might not hold. The longer you bang on something or a door or whatever, it gets weaker, right? Especially when it's coming down with this momentum. All right, so 1023, I wouldn't consider it a buyable level again. All right, it's been tested enough. It might fail again and then come all the way down to 971, which will be critical to hold, and it could be a good sign. It'll be an inverse head and shoulder. And like I said earlier, above 1065, I would be bullish on the Tesla. All right, so that's what I got for you guys today. I hope you guys found this helpful. I hope you guys had a very, very relaxing weekend, a very awesome weekend, and good luck.